Well, hello again, everybody. This is John Arce at Trading Perspectives. As always, we have our good friend, Sam Clement. Sam, say hello.
Hey, John.
You doing okay today?
I'm doing awesome. How are you doing?
Listen, I'm doing absolutely fantastically. And, now that most of the states are trying to reopen their economies in some form or fashion, it's hard not to feel at least a little bit better about things,
Yeah, things are kind of trending upward right now.
Yeah, it seems like it. Over this past weekend, I was up in the mountains, or what we call mountains here in Alabama, and people were in the state parks out hiking and just out and about and enjoying themselves out on the rivers and creeks. And I understand the golf courses were more full than they've been in a while. And it seems as though everyone is out enjoying life. And yet, here we are, still with, according to the government, some pretty stubbornly high numbers of unemployed people.
Yeah, it's getting uglier, and we're at kind of historic levels of unemployment. We've lost this whole 2+ decades worth of jobs in the last 2 months. It's pretty unfathomable how quickly it's happening.
I hate to laugh about that, but Sam's absolutely right. We lost decades worth of job growth, and here's the math. Here are the numbers. Sam, over the last 8 weeks up to today, which is I guess the 18th of May, we have seen 36,492,000 Americans file initial jobless claims, and that's over the last 8 weeks.
Yeah, and that's just the documented ones.
That's just the documented, folks, and that's going to be about 20 to 25% of the workforce, depending on what definition you're using and what time frame. But Sam, that's a huge number of folks. Last month in April, the Bureau of Labor Statistics said that we shed some 20,500,000 payroll jobs. The unemployment rate spiked up to 14.7%. Mm-hmm. It would have been worse if 6 million people hadn't dropped out of the workforce.
Yeah.
There's another measure of labor force strength called the underemployment rate, and I think that was up over 22%. Mm-hmm. And here we are in May, the first couple of weeks, we're still seeing ridiculous numbers of people, 2-3 million folks per week filing for initial jobless claims. And while it felt good last weekend, people out about enjoying the sunshine, out on the state parks, I'm sure you saw a little bit greater activity. What does it mean for our society to have so many people unemployed? We're looking at the highest official unemployment rate since, I believe, certainly my lifetime.
Yeah, Great Depression,
if I'm not mistaken. And so what does this mean for society? I guess it depends if this is a short-term blip in unemployment rate or whether or not it's a long-term blip.
Well, I think it's undoubtedly a long-term thing. Your definition and my definition of long-term may be a little different, but it's definitely not. I think we can agree upon it not being a short-term thing.
When you get older, everything's a shorter-term definition, Sam.
Anyway, but either way, I think we're both in agreement that it's going to be a bit of a long-term thing. We've talked about, once things get back to normal, these jobs will come back. Well, jobs aren't coming back if businesses are closed. If people lost their money and are not, just closed for a couple months, if they shut down their businesses, which a lot of them have, a lot of big chains that you would think have stockpiles of cash have been closing restaurants, and those jobs are not coming back. So we are going to have some sort of longer-term higher unemployment rate. That's broad, but we can't really know right now. All we know is it's not going to be a full V-shaped recovery in terms of employment. So.
And this is where it gets a little bit fuzzy, gray area, if you will, Sam, because this isn't the normal. We have not seen this type of thing ever happen before, where almost an immediate stoppage in U.S. economic output. It wasn't gradual. It was sudden, a sudden shift from employed to unemployed, the sudden shift from 4.4% unemployment to 14.7%. And then who knows what the unemployment rate is going to be for the month of May, but it's going to be more than 14.7.
Yeah.
And some folks estimating 20%. Maybe we top out around 25%. And again,
that's not including the people that are
who have just dropped out. They dropped out of the
done.
workforce and just said, forget it. And while Chairman Jay Powell, is absolutely right that everything is shaping up for a recovery of some form in the second half of the year, it's kind of a recovery coming off of a very low base.
Yeah.
But still, we need to figure out how do we address this long-term unemployed, maybe a short-term, but I'm secretly suspecting it might be longer-term than most people might imagine for several reasons. You already hit on one. Businesses might not be opening back up.
Yeah.
And then two, we're also taking a look at those businesses that open up are probably realizing they can maybe do more with less, or people can work remotely and be a little bit more efficient, or there's some of this fast food restaurants going, okay, we laid you off, thanks but no thanks, because we're going to put in this kiosk, or we're changing how we deliver our business model. And then third, Sam, there are currently people right now who are making more money being unemployed than they ever did in their working lives. So much so that I've read in some states, depending on where you live, some of the wealthier states, people on unemployment insurance right now might be able to make $1,000 to $1,200 per week. And if you have two people in those states on unemployment insurance right now, Sam, that's a $100,000 salary for two people currently receiving unemployment insurance.
Yeah, that's putting you in the what percentile of income earners
and so we have a scenario where everything seems to be working against, in my estimation, headwinds. Major headwinds to get back to these same 3% unemployment rates, because gosh, right now there's not a ton of incentive for semi and unskilled workers to get back after it. Businesses are going to be refiguring, and then we also don't know exactly the damage to a lot of these bigger employers and just, well, even mom and pops. We still don't know the extent of the damage yet.
That's the gist of it is we don't know yet. We don't know the extent of it. I mean, there's even going to be, like you mentioned, with companies maybe not hiring people in the same role, some frictional unemployment, people not having the capabilities to work in the jobs that there is openings for. And so it's going to be a tough time. And I think whenever we do kind of get out of this, we're still going to settle into a new normal of a higher unemployment rate for the time being.
And so
it's a long term.
And I think you're absolutely right. We obviously didn't talk about some of the bigger ones. JCPenney filing for Chapter 11. Let's see whether or not they can come out. They employ 90,000. Nordstrom and a bunch of other larger employers, just in sheer numbers, are having some major difficulty. But Sam, you hit the nail on the head, where you open a Pandora's box, whatever euphemism or cliche I want to throw at it. We are probably staring higher rates of unemployment than we've had for the foreseeable future, and what kind of impact does that have on society as a whole?
Well, I mean, I think it's pretty long-reaching, the extent of it, and I think you'll see maybe even some kind of disinflation within wages, and just even when we maybe start getting back to these job levels, we're going to see income growth probably. With some major headwinds to it, because people are going to be, taking what they can get, really. And I mean, that's just the first thought that comes to my mind of what we're going to see. I mean, there's historically long-term unemployment rates. High long-term unemployment leads to slower wage growth, and that's pretty detrimental to the U.S. economy.
Well, you're absolutely right. So I mean, you would have a surfeit of employees looking for jobs. That puts that has a depressing impact on wages, and then also the longer people are unemployed, whether or not they're getting $1,000 a week, $1,200 a week from government in its various forms, the longer they remain unemployed, the lower their chances of getting a higher wage are. I phrase that poorly, but you know what I mean. And then also, the longer you stay out of work, the longer you were unemployed, the more your skills diminish.
Sure.
Relative to people who were employed.
It just looks bad too. I mean, just think if you're hiring two people and one has a job right now and is looking for a new job, and the other's been unemployed for 2 years, you might start thinking, gosh, is something wrong? Like, I mean, you're right. It's a bad thing on your resume. I mean, it sucks to say that, but there's truth to it. Unemployment looks bad on a resume. So
I mean, there's no other two ways about it. The longer you're unemployed, it generally has a depressing impact on your future wage growth.
Probably every week.
Every week, it's just a little bit lower. It's almost like a drip, 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 drip.
Yeah.
The longer you remain unemployed, the more your skills diminish, the less likely.
You're more willing to take whatever you can get. I mean, for countless reasons.
Yeah, there doesn't seem to be terribly much upside. So the longer we have an inflated unemployment rate, the worse off the labor force is as a whole.
Sure.
And then too, there's some personal impact. I mean, people might say I'm a corporate goon or what have you, but having an employment gives people a sense of worth.
Sure.
In some form or fashion. So not having employment, relying on the dole, if you will, maybe, Sam, would that have a negative impact on psychiatric
Yeah,
health,
the societal
psychiatric health,
impacts and the
emotional health.
psychiatric and emotional and whatever words you want to use impact is pretty far-reaching too. I mean, you start to see long-term unemployment impact everything from health to divorce rates
Yeah.
to crime levels to, I mean, even stepping away from the economic side of it, just the societal impacts that we have from this. It's pretty far-reaching when people don't have that kind of everyday, that thing to grasp onto, whether they like their job or not. It's a routine and it's a net positive. And when we pull those away, the impacts are it's a pretty long list.
Well, you mentioned divorce rates, and just financial insecurity, I guess, if you will,
Yeah.
is one of the leading stressors or
Yeah.
causes of divorce in the
I think
United
it's
States.
number one, if I'm
Yeah,
not
if-
mistaken.
and without a doubt. I mean, families argue about, or couples argue over two things. One is money, and the two is I'm not going to mention because this is a PG show. But I mean, seriously, if the financial stress in a relationship will cause stress in the marriage as
Yeah.
well, or
Yeah.
stress in any type of relationship, and then you have the breakup of families, or even just the division within families, which obviously, Sam, will have a detrimental impact on any children that are in the
Sure.
relationship as well.
Sure.
So it's almost as this death
It's a spiral.
spiral.
Yeah.
You know, you lose a job, higher unemployment. You have stress on family finances, which causes stress on the relationship, which causes stress on the children, and then bad things happen from there.
Yeah. I mean, you see it in countries with lower employment levels, higher unemployment. It's just tough on everything you see, from education levels, the average, the percent of the population that can even read. I mean, it just goes down and down and down and down the list. And so, I mean, even us stepping away, I think we're both looking at it from an economic view lens. But if we look at it from just societal, it's pretty ugly too.
It's a real ugly picture painted with a dirty brush, I
Yeah.
think. So there's really no upside at all to society or the economy by having nagging or persistently high levels of unemployment.
So what do we do?
Oh gosh, first thing we can do is, just where people who want to keep us locked down might not like it. The sooner we can get Americans back working again, the sooner we can reopen the economy, the sooner we can unfetter business, and the sooner we can figure out how to better implement and deploy a lot of the well-meaning packages and relief plans and just overall governmental schemes. When we can implement those more efficiently and let the business of America be business, we will drive down that stubbornly high unemployment rate. And now it's not going to happen in a matter of months, and that's what I think some people are hopeful for. But if we can do that, unfetter business to a greater degree, then we should be able to drive down unemployment.
And I think we've talked about before how a lot of the just economic stuff going on right now is conducive to growing businesses outside of the virus. I mean, we have record low interest rates. I mean, we have just a plethora of cash in the market just sloshing around looking for places to go. And I mean, that's awesome for businesses. So, I mean, I have this inkling that when we start to get out of this virus, and maybe there's a cure, a vaccine or not, or maybe we just start to get out of it a little bit, it's hard to not bet on America. I mean, it's hard to not bet on us recovering. I mean, yes, we both said, and I still think it's going to be a more long-term, higher unemployment, but I don't think it's a doom and gloom scenario. I think we're going to get there. I don't know what you think.
Oh, I completely agree with you on that. That's a reason largely why we sold all of our international investments here at Oakworth Capital Bank, and that's not an offer to buy or sell securities or financial services in any way, shape, or form. But America probably should come out of this in a little bit healthier shape than the remainder of the G7. I'm not going to tackle maybe Taiwan or South Korea or some of these other ones, but in terms of the G7, I think we are more diversified. I think we'll come out a little bit stronger than the remainder of the Western developed countries. What I will tell you this, though, while I mentioned unfettering business and what have you, another thing that we've got to take seriously after this, and it's going to put a real strain on public finances, which are already straining almost to the breaking point. We need to get a little bit more serious about worker training in the United States, and that goes from K through 12 education, and then also voc tech.
Schools.
Trade schools. I mean, the world needs master welders. The world needs masons. The world needs lab technicians and a whole bunch of other things.
There's money to be made in that.
There's money to be made in all those areas. And if we take workforce training And that starts at age 5. I mean, it starts very early. We make that a bigger priority than maybe athletics, maybe football, and some other things. I think that'll be really a good thing for society as a whole.
I agree.
So, Sam, I'm not sure exactly if we solved all the problems that unemployment caused, but it is something that we're going to be talking about a lot over the next 6 months as the economy reopens, as the unemployment rate remains relatively sticky, as the recovery probably is not as V-shaped as people would like. All these things, we will be talking about this because the unemployment rate is going to remain over in double-digit territory for the foreseeable future, I would imagine.
Yeah.
And we have to understand that these things will come down the pike. The longer that number stays as high as it will be, and anything we can do to drive that down ultimately will be good not only for the economy but for society and for our neighbors and friends.
Yeah, I mean, I think we gave a little dose of reality as well as not kind of painting a doom and gloom picture. So
there you go. Well, Sam, I've always got to say this, but I always tell folks, thank you all so much for listening. We'd love to hear from you. Also, if you have any questions or comments, please let us know. You can send us an email to tradingperspectives@oakworthcapital.com, or you can leave us a review on the podcast outlet of your choice. If you're interested in hearing more or reading more of what we have to say, you can check out our blog, Common Sense, at oakworthcapital.com underneath the Thought Leadership tab. And Sam, I'd be remiss if I didn't mention the New Normal series that the investment committee here at Oakworth Capital Bank is working on. That also is underneath the Thought Leadership tab. We're two stages done with the six-part series. By all means, please go on there and take a look. Check it out. It's good stuff. Sam, I'm going to give you a last tank.
that's all I got.
That's all I've got today, too. Y'all take care.